4 years ago, Donald Trump was elected president of the United States, and small company stocks went up over 20% in the 3 months post-election. In the 3 months since Joe Biden was elected president of the United States, small company stocks are up over 30%. Do you think small company stocks just like new presidents? Hi, I'm Kent Kramer, Chief Investment Officer of Foster Group, and for the next few minutes, we're going to look at the last 2 weeks in markets, but we're also going to look at the performance of small company stocks and a couple of other factors and see if maybe elections or inaugurations have anything to do with their outperformance, or if maybe there's something else that we can learn from their performance over time. Like many parts of the stock market, small company stocks seem to go in and out of favor. Sometimes they enjoy a large performance advantage over large company stocks. Other times they dramatically underperform the market. Historically, all the factors, at least all the academically supported factors, have tended to show better long-term performance than the market as a whole. But oftentimes an investor has to be very patient to get those improved long-term returns. So looking at this picture, you might feel like me, kind of a sigh of relief. We made it. Feels like everybody breathed a sigh of relief after Wednesday's inauguration ceremonies. Whether fans of President Biden or not, we heard a lot about the value of the peaceful transfer of power, and that happened, though in kind of a uniquely 2020, 2021 way. The vaccine news is still the most important economic variable out there, it seems. And here there's been progress. The Biden administration hopes for 100 million vaccinations in the first 100 days of their administration. The good news is, in the last 5 days, last week, the number of vaccinations that were happening already was averaging over 1 million per day. So perhaps the Biden administration's goal, which seems so large, 100 million vaccinations in the first 100 days, can actually be exceeded based on the rate of improvement we're seeing right now. So the last 2 weeks in stock markets saw a separation between the market as a whole and the return of stocks of small companies. You can see in this chart, the blue line there represents the return of small company stocks. Down below, you see the return of the S&P 500, stocks outside the United States, and the bond market. You can see there's been a dramatic over 3% outperformance of small companies just in the last 2 weeks. Now, the outperformance of small companies has been occurring since Election Day. So is there something about the new administration that brings uniquely favorable environment for small company stocks? Here again, you see those same 4 parts of the market. And again, that blue line representing small company stocks has been on a tear since Election Day through Inauguration Day. If you remember one of our Financial Perspectives videos a few weeks ago, we talked about the idea of factor investing, or certain kinds of stocks with certain characteristics, having higher returns over longer periods of time than the broad market. Now, those higher returns often come with a risk premium. The investor has to choose to look different than the market, sometimes better, sometimes worse, in order to pursue these factors. Today, I want to look briefly at one of them, which is the size factor. And again, could put in the context of the election and inauguration. Now, if you look back at small companies in 2020 up to Election Day, you see that small companies are really dramatically underperforming the broader market, as well as stocks with quality earnings and price momentum. So the blue is stocks with price momentum. The pink are the stocks with quality earnings. And then you see the brown, which represents the US market as a whole, the S&P 500, and the purple is the small company stocks. So small company stocks were negative year to date through Election Day, while some other parts of the market were positive. After the election, the immediate post-election effect, these small lagging companies, their return took off, dramatically outperforming stocks exhibiting other factors. Value stocks, which had been an even worse performing factor, also seemed to take off post-election through inaugural, outperforming the broader market. There again, you see the purple line being small companies, strong outperformance, and the yellow line being the stocks of value companies, which have been significantly underperforming through Election Day. So is this just a new president thing? I recall the same kind of thing happening following the election in 2016. The Russell 2000 index of small stocks was actually up over 20% in less than 20 business days post-election. So here on this chart, the same set of factor indices, but now we're looking at the 3 months post-2016 election, the election of Donald Trump. The purple line again representing smaller companies and showing extreme outperformance relative to the broad stock market, the brown line, which was the S&P 500 at a little bit over 7%. Unfortunately, it's not always the case that a new president gets the same welcome or the same love from the market or small stocks. In 2008, following the election of President Obama, a Democrat, small companies declined, though doing slightly better than the broad market. Again, these are the 3 months following the election of President Obama in the chart we're looking at right now. In 2000, chart that I don't have because not all these factor indexes go back that far, but in 2000, small stocks also declined along with the broad market following the election of George W. Bush, a Republican. Of course, the dot-com bubble bursting in 2000 and the great financial crisis in 2008, 2009 were not really the two incoming new presidents' fault. The better takeaway from all this look at factors is that every factor has outperformed the broad market since the 2008 election, though not every day, every month, or even every year, but over the long span of time. So this chart shows all of these factors versus the S&P 500, again, the brown box, since the 2008 election. And you can see that all these 5 factors that we've been talking about have all shown superior performance to the broad market for someone who held them the entire time. The long-term rewards have been there for factor investing, but in order to be sure an investor got the benefit or the risk premium, there needed to be a long-term commitment from the investor. It's easy to miss the best periods, as we've just seen with small companies since the election. Sometimes those best periods come after long periods of underperformance, and then they quickly shoot up with dramatic outperformance. So while it may be tempting to wait until the time seems right to invest in a market or in a specific factor, the cost of mistiming versus ongoing participation can be high. This chart just shows the opportunity cost of missing some of those best days or those big positive periods. With the long-term history in the investor's favor, is it really worth the risk of missing out on those best days by trying to time the market? You can see again from this chart, the cost of missing out, cost of missing the 25 best single days, in this case, the S&P 500, was pretty significant compared to just the total period on the far right. You know, there are many inspirational articles, commentary, and speeches in the past week. One of the most artistic and moving was delivered near the end of the inauguration ceremony by a 22-year-old American youth poet laureate named Amanda Gorman. If you weren't able to hear Ms. Gorman live, there are many websites where you can watch and listen to her recite her poem, The Hill We Climb. Given the difficulties, uncertainties, and strife that marked 2020 and even the early days of 2021, these last 2 stanzas, for there is always light if only we're brave enough to see it, if only we're brave enough to be it, those last 2 stanzas capture a determined and hopeful spirit that I found very encouraging in the light of everything that's happened in the last 12 months. I'd encourage you to give it a read or a listen if you're able to. So as always, thanks for watching today, for giving us some time. If there are any questions you'd like to hear us address in the future, please let us know at one of these contact points here on this slide. We'd be glad to address the questions that are most on your mind. In the meantime, if you'd like to talk to a Foster Group advisor, please give us a call or drop us an email. We're always ready to have those conversations about your investment portfolio or financial plans, whatever else is on your mind. Thanks again for joining us. We look forward to seeing you soon.